That's not an egg frying. It's the Martin County real estate market, which is sizzling hot. Values are high and so is demand. Properties draw competitive offers within minutes of going public. A national website won't help you navigate this market. You need a local expert. You need Martin County Realtors of the Treasure Coast. Our members know the neighborhood, the communities, the natural resources. They'll help you discover the hidden gems and work hard to get the best price possible. Visit findalocalrealtorexpert.com.
We're gathered here today to join Mike and Jill in holy matrimony.
So they may file jointly this tax season.
And you are?
April from TaxAct, the tax filing software with the expert guidance to help you file for less and get more.
Works for me. So, Mike, do you take this woman to love, honor, and get her a maximum refund?
I do.
Jill?
Ditto.
I now pronounce you married, filing jointly.
I always cry at filing status updates.
TaxAct.
Switch to TaxAct today and start for free.
See taxact.com for details.
Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mortgage Eitel.
All right. Hey, everybody. My name is Mark Eitel, host of the Mr. Mortgage Show, and happy weekend to everybody. We really appreciate you spending some of your weekend with us each and every weekend. So before we dig in, I just wanted to thank everyone for their questions this week. We had some questions come in via phone at the office over the course of this past week, as well as questions that were emailed to us. So I encourage everybody to send in their questions, and the anytime hotline is 561-291-8569. You can call or text if you don't want to talk to us, 561-291-8569. Dom, my producer's in the studio with me, and he is manning the question line. So any questions that you have, we are happy to answer them for you. This show is designed to be for you. We want to provide content that you find meaningful. So if there's topics that you'd like us to cover or questions that you have, please continue to send them in. Again, this is for you, so we want this to be interactive. So again, 561-291-8569, or if you'd prefer email it, just visit the website www.mr.mortgage. There's no .com, just mr.mortgage. Actually, you don't even need to type in the www. Just go to your browser, type in mr.mortgage, and we will magically appear. In the upper right-hand corner is a tab that says About Us, and there's the Contact Us form. So hit the website, text your questions in. We are here for you. And let's jump into this week's show. So I want to talk about 1982. And first of all, can you believe that was 40 years ago? I can't believe 1982 was 40 years ago. Fast Times at Ridgemont High, one of my all-time favorite movies as a kid, was released in 1982. And Duran Duran released their album Rio with the hit song Hungry Like the Wolf. I don't know how many of you remember the early MTV days, but you couldn't turn MTV on without seeing that video, Hungry Like the Wolf from Duran Duran. And the San Francisco 49ers won the Super Bowl, if I'm not mistaken, in 1982. But why am I waxing nostalgic about 1982? Well, the inflation numbers that were released this week harken back to 1982. We are at a 7.5% annualized inflation rate, and we have not seen numbers that high since 1982. So, yeah, grab your cassette tape of Duran Duran's Rio, and as you're pumping that $4 a gallon gas and spending $6 a pound for ground beef, maybe the old tunes will make it more nostalgic and less frustrating. But yeah, inflation certainly has a grip on us. It's here to stay, at least for the near term. And I know we were told it was, what was the term they used? It was the first time I'd heard it in a long time. Bear with me. The term they used was transitory. It was going to be here just for a short time as the economy transitioned. And it's scary that we were told that. But anyway, inflation's here. And the reason I'm mentioning inflation is, and it happened again this morning as I was prepping for the show. I was reading an article in Forbes magazine, the online edition, and they were talking about strategic investment strategies to hedge against inflation. And naturally, they covered all of the go-tos, if you will, precious metals, gold and silver as a hedge against inflation. There's some bond plays that make sense as a hedge against inflation, but also real estate. They touted real estate as a strong hedge against inflation, which is awesome for us here in our area as real estate remains strong, but in the business. So it makes sense to own and to be buying real estate if you're in the position to do so, not only for your own equity gains long term, but as a place to park your money to hedge yourself against this inflationary cycle that we're in. And we talked about that last week. There's a lot of loan programs that allow you to invest in real estate and not need a lot of income on your own. We're using the strength of the property for the underwriting of the investment property loan in the form of a debt service coverage ratio. So if the property cash flows, it's fundable from the lender standpoint. So I'm not going to dive too much into that. We covered that last week. I know we had some questions during the week regarding that loan product, and I talked to several of you. Larry out in Wellington, thank you so much for the call this week and for trusting me with your transaction. It looks like we're going to be able to do that for Larry. So that was nice to get that call this week. But also we talked about reverse mortgages last week, and we had a lot of questions come in during the week about reverse mortgages. So I want to dive in a little deeper regarding that particular loan product, primarily as a hedge against the cost of living increases associated with the inflationary cycle that we're in. So we're going to dive into that this week. So we'll continue to answer your questions. We're going to cover all the news of the week. We're going to cover the loan products that are available to you in this marketplace. And 1982 brought us some good movies, and some may question some good music, but it certainly brought us a high inflationary rate, and 2022 is bringing that right back to us. So I know it's super frustrating out there. There was another article that I read in CNBC this week, I believe it was published on Wednesday, that talked about consumer debt has increased to the highest level they've ever recorded. And I want to say it was an additional $13 billion in consumer debt. I'll pull the article at the break and just confirm that. But that's an interesting place to watch for the overall health of the economy, because as the Federal Reserve starts increasing interest rates, the consumer debt is what gets hit first. So your credit card payments go up. It costs more money to finance an automobile, a motorcycle, a boat. So a larger chunk of your income is being spent on consumer debt. So if you couple the largest increase in consumer debt with the inflationary cycle that we're in, right? So it's going to cost you more to make your credit card payment, but it's also costing you more for gas. And you couple that with some aggressive rate hikes over the next 2 to 3 years, as is forecast by the Fed, it's going to cost you more to live. And one of the best places to offset increased living expenses is to buy a home. So circle that all the way back to real estate as a hedge against inflation. If you own your home with a 30-year fixed rate mortgage, or your principal and interest payment doesn't go up, that portion of your mortgage payment never increases. Granted, taxes and insurance will adjust from time to time, but the lion's share of your mortgage payment is locked for 30 years. Now, that in contrast to somebody renting, those rent charges go up every year typically. So if you just want to hedge your expenses from a housing cost over the next period of time moving into this inflationary cycle, buying makes sense. And we talked about it many, many times on the show, and I'll continue to talk about the value of owning real estate. But if you're, able to pay $2,000 or $3,000 a month for rent, some people are paying far more than that. You're certainly able to consider purchasing a home and stabilizing that monthly housing payment by getting a 30-year fixed rate mortgage or whatever makes sense to you, a 15-year fixed rate. But my point in all of that is just that a fixed rate loan product stabilizes that housing expense while everything around you rather continues to go up. So that's a secondary way to use real estate to hedge against inflation. You couple that with the cost of money now even at these slightly higher interest rates, the cost of money is still ridiculously low. So it's going to be cheaper than the other sources of funds as are available in an inflationary cycle. So we are going to be right back with you after this short break. On the other side of this, we'll cover your questions. So just keep sending those questions in. 561-291-8569 is the Anytime hotline. 561-291-8569 is that hotline number. We'll see you on the other side of this break. Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org. Are you a rock star real estate agent? I mean, truly one of the best? If you are, let's talk. This is Mark Eitel, host of the Mr. Mortgage Show, and we are currently expanding our network of rock star referral partners. If you think you have what it takes, we'd love to connect. Just visit Mr.Mortgage. That's www.mr.mortgage. There's no .com. Just type in Mr.Mortgage, hit the Contact Us button, and let's talk. It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at soflappraisal.com. That's soflappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. soflappraisal.com. And tell them you heard this on the Mr. Mortgage Show.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, we are back. Again, my name is Mark Eitel, host of the Mr. Mortgage Show. And you heard the big guy. Give us a call or text your questions to 561-291-8569, the Anytime hotline, 561-291-8569, or shoot us your questions via the web at www.mr.mortgage. So we're going to dig into some questions. As promised, we're going to cover reverse mortgages a little bit in this segment, as we got a lot of questions over the week regarding them. And there are 2 or 3 questions that seem to be popping up regularly. But I know Dom just held up his finger there, letting me know that, well, is he giving me the finger or holding up his finger? I'm not sure, but a reverse mortgage question came in the first segment. So Dom, what do we have there?
All right, so here we have, do I need to have a certain credit score to qualify for a reverse mortgage? My credit is not great. Will this make a difference?
All right, that is a great question, and we get that a lot. So I'm going to start by answering that question, then I'm going to dig into the other questions that are typically asked about this product. So your credit score does not matter. So you can get a reverse mortgage with a lower credit score. Your credit is reviewed. The lender is going to want to see your willingness, not necessarily your ability, but your willingness to repay. So they're going to review your credit. They're going to look at your credit history, but it's not a score-driven product. And I encourage you not to let that be a hindrance to having the conversation, be it with me and my team or someone else regarding the reverse product, because credit score is not an issue with this particular product. They're looking at your age and they're looking at the value of the property. Credit score is not scrutinized in the reverse mortgage product from an underwriting standpoint. They want to make sure, the lender that is, that there is nothing that's going to hinder the property. So there are no tax liens or judgments that might already have a lien applied to the property. But to answer your question, credit score is not an issue. And oftentimes what we may perceive to be quote unquote bad credit is still perfectly fine with this particular product. And it doesn't bump the interest rate either. Sometimes loan products with lower credit score borrowers may have a higher interest rate. With the reverse mortgage, that's not the case. So they're looking at your age and the value of the property to make the underwriting decision. So great question. A few of the other questions that we get regarding this loan product, I'm just going to go through them, is what happens when I die? And that's a big concern for a lot of people. A lot of people, especially those who are planning to leave their real estate to their children or through the estate to other heirs. To answer your question, it's just as if you were to pass away with a normal mortgage on your house. You know, it's a lien on your property that has to be satisfied either by the estate selling, refinancing, or paying off that lien. But it's nothing more than that. It's a mortgage lien on your property that has to be satisfied at your death by the estate. So typically you're given 12 months, or the estate, I guess, is given 12 months to satisfy that lien. So there's usually ample time for the property to go through whatever process it needs to, probate or whatever the case is with the estate being settled. But your heirs are entitled to the property and to the equity. They, just as if it was a normal mortgage, are going to need to either pay that mortgage off, refinance it into one of their names, or just sell it, and then the estate will benefit from the equity. Another question that we get often, and I addressed it a little bit there, is does the bank own my house? Does the bank own my property? The answer to that question is also no. It's simply a lien placed on your property, just like a normal first or second mortgage or equity line that needs to be satisfied at a later date, either via sale or refinance. So the bank does not own your property. You remain the owner of the property. Nothing changes on the title. It's just like any other mortgage. They have a lien position against the title, but they do not own your property. Another question that came up over the week was, what happens if the property value goes down and I owe more than the property is worth when I pass? So that's an interesting question, and one we haven't thought of recently because we've been in such an upward swing in appreciation. But most of us are old enough to remember the crash that we had in real estate in the 2000. 9, 10, 11, 12, whatever that period is. I still try to push that out of my mind. But yes, it certainly can happen for more than just that reason. And the answer to that question is nothing. If you owe more than the property is worth when you die and the property transfers to your estate, they simply hand the keys back to the bank. They're not responsible to pay that deficit, if you will. So let's use very round numbers. Let's say you have a $400,000 house and you took a reverse mortgage for, I don't know, let's say $250,000. And you at the point of inception, you have $150,000 in equity. So let's say over the course of the remainder of your life, that balance grew in the reverse mortgage, and you now owe $300,000. But the house declined in value, so now it's only worth $275,000. So you owe $300,000. The house is no longer worth $400,000. It's worth $275,000. That $25,000 deficit, your estate nor are your heirs responsible for that. They can hand the keys back to the bank, and the bank doesn't even take the loss. This reverse mortgage product is insured by the FHA, so the bank is made whole. And part of the cost of a reverse mortgage is that mortgage insurance premium that you, as the borrower, pay in your closing costs. So the bank is insured by the FHA. Sorry about that. So they don't incur the loss, and you've paid for that policy, so your heirs don't incur the loss. Everybody's protected. The property sells at whatever the fair market value is, and there's no coming back on your estate or your heirs. Even if you have substantial assets in other positions, It's not, you could have $1 million portfolio that you leave to the estate. They don't have to liquidate any of that, any of those monies to satisfy that deficit. So that's another question we get a lot of. And just to use that example that we talked about, the $400,000 house with the, $275,000 reverse mortgage, you get those funds. You can take a lump sum at closing and then receive the balance of it in the form of a credit line over the life of the loan that you can tap as necessary after the first year. They don't give it to you all at once. You're able to take one draw in the first year, and then from there at the 13th month moving forward, you can tap additional equity. But where I'm going with this is that balance that remains in the form of a credit line also grows. It accrues interest. So whatever interest rate the lender is charging you for the mortgage, they're also paying you with a slight premium. Actually, they're paying you in the form of interest on that balance that you haven't used yet. So there's a lot of moving parts with this loan, and it's certainly worth a conversation. And it's not right for everybody, but the people that it's right for, it's an amazing tool. It's an amazing opportunity. So the bank doesn't own your house. You own your house. It still transfers to your estate just as if it had a normal mortgage on it, and your estate is able to liquidate the asset and satisfy the mortgage, or refinance it and keep it in one of the heirs' names. And you don't owe any of the deficit balance if it's worth less than you owe on it when you finally pass. So one other really cool thing about the product is that if one of the spouses is younger than 62, we can still make this work, and they can stay in the property until they pass. They can remain in the home for the rest of their lives. Interesting loan product. Again, not right for everybody, but also a wonderful way to tap some of the equity that you have. And you've never had more equity than you have right now. Tap that equity, forego a mortgage payment, and use that to offset some of this inflationary expenses and costs that we're seeing. So I hear the music. We will be back after this break. Again, 561-291-8569 is the Anytime hotline. Thanks.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org. It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at soflappraisal.com. That's soflappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. soflappraisal.com. And tell them you heard this on the Mr. Mortgage Show. Are you a rock star real estate agent? I mean, truly one of the best? If you are, let's talk. This is Mark Eitel, host of the Mr. Mortgage Show, and we are currently expanding our network of rock star referral partners. If you think you have what it takes, we'd love to connect. Just visit Mr.Mortgage. That's www.mr.mortgage. There's no .com. Just type in Mr.Mortgage, hit the Contact Us button, and let's talk.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, so we are back. Again, my name is Mark Eitel, host of the Mr. Mortgage Show, and very, very happy to be with you on this this beautiful Saturday. I hope you have some amazing plans today. But thank you for spending some of your day with us. Dom, my producer, and I are excited to have you. And we've got some questions rolling in, so that's exciting. 561-291-8569, 291-8569. That's the Anytime hotline. And by Anytime hotline, I mean it rings here while we're in the studio so we can get your questions on the air. But also during the week, that line forwards to my office. So if you need me or have questions that you want either addressed immediately or on the air, just use that number 291-8569. That is the show's Anytime hotline, or visit mr.mortgage on the web. So, I'm not going to spend any more time on the reverse mortgages. They're definitely an animal of their own, and we are happy to answer any questions that you have and spend all the time that you need to get your concerns and questions addressed. So happy to spend some time with you. Hit that hotline, 561-291-8569. But let's keep this train rolling. I know we've got another question. I see Dom is giving me the thumbs up. So Dom, what do we have?
All right, so this one was sent in anonymous. It says, you talked about a rep loan. Can I refinance and pay off my boat with this type of loan?
All right. It's actually called a REC, R-E-C, REC loan. And it's a refinance product that we have that we're seeing a lot of call for that right now, because the refinance is moving into this rate increase cycle where people primarily taking advantage of the historic low rates and simply refinancing their mortgage with the intent that they want a lower interest rate and possibly a lower payment, and even maybe shorten their term. We took a lot of people who were 3 or 4 years into a 30-year fixed rate and refinanced them into a ridiculously low 15-year mortgage. So that the goal of the refinances of the last year or so was primarily to reduce the interest paid or reduce the mortgage payment itself. What this REC, R-E-C loan is designed to do, and REC simply stands for reduce, eliminate, and consolidate. So we have to meet 2 out of 3 of those requirements for it to be classed as a REC refinance. And what it allows us to do is reduce your overall monthly expenses. So we're not just looking at the mortgage. So in this instance, your boat payment. So we're taking your overall monthly expenses, your credit cards, your boat, your car, whatever you want to pour into this refinance and get out from underneath those additional payments. We need to reduce your overall outflow. So we need to eliminate one of those other trade lines, if you will, one of those other consumer debts. So again, in this instance, your boat loan. So yes, this loan would work for that because we're going to refinance the property and pay off the boat. And in theory, I'd have to look at the scenario, but we're going to reduce your outflow and we're eliminating that boat payment. And the other is consolidate. So we need to roll some additional trade lines into this single trade line in the form of a mortgage. So reduce, eliminate, and consolidate. If we can meet 2 out of 3 of those categories, then yes, you can use the REC loan to pay off almost anything, actually. I'll tell you an interesting story that a scenario that we had happen. This is a self-employed contractor, and the gentleman owns a bunch of equipment in his business, and some of it's in his personal name, and we all know that it's easier to get credit oftentimes in your personal name, especially if you have substantial assets and you're the guarantor, where sometimes it's more difficult to get the loan in the name of the business. So this gentleman had some equipment in both his business name and in his personal name. He had a load of equity, but he also had an amazingly low interest rate. So he was hesitant to approach it in the form of a traditional refinance because, mortgage to mortgage, it might not make sense. It might not make sense to, move a rate in the low 3s or mid 3s into something higher than that. But when we sat down and we looked at all of the other expenses that he has, and his desire was just that, to pay off a boat. But when we looked deeper, he had some other equipment. So we refinanced the house and we paid off both his personal and business debt. So he took the cash out of the mortgage to pay off the loans that were in the business name. And then we paid off one car, one piece of equipment, and a boat that were in his personal name. So we used this rec loan and we reduced his overall monthly outflow significantly. I mean, by more than $2,000. But this was a high net worth individual. He had a large mortgage to begin with, but he also had, I want to say we rolled four consumer trade lines into this mortgage. So the rec loan is a powerful tool. If you can meet the requirements for rec, there are some advantages in closing costs and underwriting times. But if you can't meet rec, there's still the traditional cash out refinance out there. But if your purpose for the refinance is to pay off debt, then the rec loan certainly makes sense. So to answer your question, I know that was a long way around, but to answer your question, yes, you can use the rec loan to pay off your boat. And rates are still low enough that it makes a lot of sense to do that. So it's a great time from the standpoint that there's a lot of equity in the property. You're getting much lower rates than you are on your consumer debt to pay that off. And home improvements is another place you can use that cash out or the rec loan to pull some cash out, because a lot of people who took equity lines are going to see those interest rates increase as the Fed starts bumping rates up later this year. And I don't know which reports are accurate, but I've seen as low as 4 predicted rate increases for the year and as many as 11. And I can't imagine 11. If he's going to do 11, he better get started soon, because that's going to start hitting us hard and often. But somewhere between 4 on the low side and 11 on the high side is what we are seeing in the crystal balls of the soothsayers, if you will. That was hard to say. I spit all over myself with that one. But the people who are much smarter than us, or at least get paid to pontificate on the economy and interest rates, are calling for somewhere between 4 and 11 rate increases in the next year. So that home equity line that you may have used to remodel the kitchen or put in the pool, that rate's going to start moving up. So you're going to want to factor in those increased expenses moving forward, and maybe look to one of these rec loans to pay that off. And if you haven't tapped an equity line yet and you're looking at it moving forward, maybe a cash out refi, just a bread and butter old fashioned cash out refi may make sense, instead of starting with an equity line that you'll need to absorb later when rates are higher. So all of those are things, rather, that you want to consider when you're doing this. So if you've got some assets that you're going to hold long-term, like I mentioned, this gentleman's equipment, or a lot of boat loans are 20 years. So if you plan on that being with you for that entire term of 20 years, then rolling it into the mortgage may make sense with one of these rec loan products, or with just a normal cash out refi, because rates are only going to go up from here. And we talked about it in the first section. These are other ways to hedge against inflation. And by inflation, we're talking about all the expenses that we experience as a consumer. So your credit card payments, your boat payments, your equity lines, all of those loan products are going to see higher interest rates once the Fed starts, he pulls his 6-shooter out and starts firing away at these increases. So I just share all that because you're equity rich right now. It may make sense to move some of that around and offset those additional expenses. So thank you so much for that question. Yes, a rec loan can be used to pay off toys. They're not just for credit cards. You can pay off boats, jet skis, whatever you need to pay off, as long as we can make it make sense on paper and we're reducing your outflow. So there is my cue. I love that song. We are going to be right back after this break. I encourage you to hit the Anytime hotline, 561-291-8569. That's 291-8569. Or visit us at mr.mortgage. Thank you. Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org. Are you a rock star real estate agent? I mean, truly one of the best? If you are, let's talk. This is Mark Eitel, host of the Mr. Mortgage Show, and we are currently expanding our network of rock star referral partners. If you think you have what it takes, we'd love to connect. Just visit Mr.Mortgage. That's www.mr.mortgage. There's no .com. Just type in Mr.Mortgage, hit the contact us button, and let's talk. It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at SOFLappraisal.com. That's SOFLappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. SOFLappraisal.com. And tell them you heard this on the Mr. Mortgage Show.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, I'm Mark Eitel, host of the Mr. Mortgage Show, and we are back. Again, anytime hotline, call or text your questions to 561-291-8569 or visit us online at www.mr.mortgage. Leave off the .com, just type in Mr.Mortgage. So, to wrap that up, the rec loan is a pretty powerful refinance tool that you can use to tie up a lot of financial loose ends and pay off some other consumer debt. So thank you so much for that question. We're going to keep this party marching in the streets. I know we got some additional questions that came in, so I'm going to kick it over to Dom, the producer, and see what he's got for us. Any more questions there, Dom?
Yes, the next question I have is, what is mortgage insurance?
Oh, the dreaded and often confusing mortgage insurance. That's a great question. So when you're buying real estate, especially for the first time, my God, do you have to buy a lot of insurance? And what is all this insurance? You have mortgage insurance and homeowners insurance and windstorm insurance and flood insurance, and there's insurance for my insurance. What is going on? So what is mortgage insurance? A lot of people confuse that, and I get the call and they say, "Hey, Mark, there's mortgage insurance quoted on here. Is this my homeowner's insurance?" And the answer is no. What mortgage insurance is, and I'm going to use round numbers again because I'm a very round number guy. So 80% is the magic number for a lender to have a comfort level with risk exposure on a property. So if you were to purchase a property for $100,000, you could get any lender to loan you $80,000, and they're very comfortable with that risk exposure because in this circumstance that they would have to foreclose on the property, there's 20% equity to offset any expenses associated with foreclosing, and then their assumption is they can sell the property at a price that's going to recoup those expenses as well as pay them that 80% risk exposure. When you exceed that 80%, there's a magic tool in the lending world called mortgage insurance. And the reason it was introduced is a lot of lenders did not want to extend credit beyond 80%, which made it difficult for people, especially the first-time buyer, to enter the market because that meant you would need to have a 20% down payment. So this mortgage insurance product was created to insure the gap, if you will. So let's imagine that in that world of the $100,000 home. So we're back even past 1982 in that example, because I'm sure homes were a lot more even in 82. But anyway, $100,000 purchase. Let's say you've got only $10,000 or $5,000 to put down, but you meet all the other requirements for the loan. Lenders will loan that because there's mortgage insurance that insures them on that in the 90% example, that 10% gap. So that mortgage insurance that you're paying for, it does you no benefit. It's not for you, it's for the lender, so that if they foreclose and they only get $80,000, right? That 80% risk level. They sell the property for $80,000. It's a $10,000 deficit. That mortgage insurance ensures that gap is covered and paid to the lender. So you're paying an insurance policy to the lender for borrowing more than 80%. Now, I say that, but we've got a brand new loan product that we launched at the end of last year that will allow that number to be moved up to 90%. So you can borrow now. There are definitely credit requirements and underwriting guidelines that have to be met, but it's a conventional loan product. There's no, it's not, abnormally difficult to qualify for, but you can borrow 90% without mortgage insurance. But that mortgage insurance is simply there to protect the lender to cover the gap between 80% of the value of the property and the actual loan amount. So I hope that makes sense. You'll hear mortgage insurance referred to in several different ways. It's sometimes referred to as MIP. You'll hear realtors and mortgage brokers talk about MIP, which is mortgage insurance premium. That's the portion of your payment each month that goes to pay for the mortgage insurance premium. So if you hear somebody say MIP or MI, which is just short for mortgage insurance, or PMI, which stands for private mortgage insurance, all of those three terms refer to that policy that ensures the lender is covered in the event of a foreclosure that doesn't exceed 80% of value. So I hope that makes sense. There are some ways around it. The new loan product allows you to borrow 90% with no mortgage insurance. And one of the cool things about mortgage insurance is that, well, I guess there's nothing really cool about it. It's an expense, but it's good that it's there, right? Because it does enable you to buy a property without putting 20% down. But with a conventional loan, you can borrow up to 95% even as a first-time home buyer. You can borrow 95% and get conventional financing with mortgage insurance, right? So you're going to have to pay the insurance on that 15% gap. Let's call it the gap, if you will. But as soon as the property appreciates or you've made enough payments to reduce the principal to less than 80%, and most lenders it's 78%. So as soon as your principal balance hits 78% in the form of appreciation or principal reduction or a combination of both, you can contact your servicer and let them know that you would like the mortgage insurance drop. So it takes a phone call. Sometimes it takes an appraisal. If there's enough equity there that they can do a desk appraisal to drop the mortgage insurance, it's an awesome tool to use, the mortgage insurance, to get into the property with less than that 20% down payment. And then once the property reaches a value where your loan is reduced to 78% or less of the value, then you're petitioning your servicer to drop the mortgage insurance. So it's a powerful tool that allows all of us to borrow more than 80% to buy a property. So conventional financing up to 95% is going to carry mortgage insurance. There's actually even a conventional product out there to 97%. It's pretty amazing at the loan products that are available out there right now. But the mortgage insurance is not homeowners insurance. It's not flood insurance. It's not title insurance. And that's another thing that confuses people. That's another insurance I forgot to mention. So you borrow 90% and you buy a house. And if you're in a flood zone, you have to have flood insurance. If you're east of 95, you're most likely going to have Citizens write your windstorm. So now you've got a homeowners insurance policy. You've got a windstorm policy. You have a flood insurance policy. You have mortgage insurance, and you got this thing called title insurance at closing. So yeah, you're definitely insured against what not too many people know, but you're insured. So mortgage insurance covers that gap, allows you to borrow more than 80%. Title insurance, and we all see that commercial on TV now with the title lock thing. Title insurance ensures that there are no problems with the title. Could be liens, recorded or unrecorded. Nobody's going to come back from the history books and lay claim to your property. That title insurance insures both you and the lender for that purchase amount against anything that happened to the property title-wise, right? So if there was an unrecorded deed and Jeb left the property to cousin Earl, but they never recorded the deed. And 70 years later, you buy the house and, who did I say? Jeb and Earl. One of their nephews or nieces comes knocking on the door and says that was really my uncle's property. That title insurance policy is in place for that. So happy to dig in deeper on all of these topics. If you have questions, just give us a call. 561-291-8569 is the Anytime hotline, 291-8569. Again, that rings here in the studio where Dom, my producer, will jump on the call. Or during the week, that transfers to the office. So 561-291-8569 is the Anytime hotline, or visit the web, www.mr.mortgage. Mortgage insurance covers the gap of the loan amount that exceeds 80% of the purchase price. So we're going to be back after these commercials. And hey, I got a lot of questions this week about who this is, this song that's playing underneath me as I get out of each segment. If you know who it is, text me the right answer and I'll send you a Starbucks card.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org. It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at soflappraisal.com. That's soflappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. soflappraisal.com. And tell them you heard this on the Mr. Mortgage Show. Are you a rock star real estate agent? I mean, truly one of the best? If you are, let's talk. This is Mark Eitel, host of the Mr. Mortgage Show, and we are currently expanding our network of rockstar referral partners. If you think you have what it takes, we'd love to connect. Just visit Mr.Mortgage. That's www.mr.mortgage. There's no .com. Just type in Mr.Mortgage, hit the Contact Us button, and let's talk.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
And we are back. I'm Mark Eitel, host of the Mr. Mortgage Show. You can reach me at 561-291-8569, just like the big guy said. Or visit us online at www.mr.mortgage. There's no .com, just mr.mortgage. So, yeah, we had a lot of great questions so far. I know mortgage insurance confuses a lot of people, so hopefully I eased some of that confusion, because sometimes my explanations can go a little long, so I apologize about that. But yeah, so one thing I wanted to throw out to you as we continue to navigate this crazy real estate market that we're in, I had a couple of contracts cross my desk this week that really reminded me of the necessity of having a great real estate agent. And I'm not going to call out anybody by name. I don't have their permission to. Maybe I'll bring some people on the some of these agents on the show one day. But we're seeing on the buyer side, man, buyers are just really doing anything it takes to make offers that they hope will get accepted, and really exposing themselves to risk. So I saw some contracts this week come into the office that really just kind of jumped out at me, with strong agents representing their clients and navigating the market as well as navigating their risk exposure. So if you have a great agent, hold on to them. I know the market's frustrating out there, but hold on to them. It's not their fault your offer did not get accepted. I'm seeing people make 8, 10, 12 offers before one gets accepted. And I know it's frustrating, but if you have a great agent, hold on to them. They'll get you through the process. If you don't have a great agent, call me, 561-291-8569. I work with a lot of really good agents, and I will get you in touch with somebody that can take care of you. I don't care if you're in Fort Lauderdale, if you're in Wellington, if you're in Jupiter, if you're in Stewart. We're blessed to work with a large network of agents who trust us with their clients, and I see them operate on a day-to-day basis, and I would be happy to get you in touch with a real pro. I call everybody at that level a rock star, so if you want a rock star agent, give us a shout. I'm happy to get you in touch with one of the agents that we work with that I know will do a good job for you. So 561-291-8569. So hang in there. I know it's a crazy market. I saw one client this week. Man, I felt so bad for him. There were two people left at the negotiating table, and this is a strong offer, strong buyer, fully pre-approved. This is their fourth attempt at a property, and there was a cash buyer that they were up against, but they were $200,000 higher than the cash buyer. And at the last minute, and I think the listing agent was just using my buyer's offer as a strategy to get that cash offer up. But at the last minute, the cash offer matched the mortgaged offer, and they went with the cash offer. But I know it's difficult out there, and this particular buyer is represented by an amazing agent, so they were right in the thick of it. They knew everything that was going on. They knew that they were up against cash, and they had a shot at it right up until the end. But I know it's a challenge. Just hang in there, stick with your agent. I'm sure they're in there fighting for you. And there's a lot of amazing loan products that we have available to us to make your offer as good as cash, and I really encourage you to do that. What we're doing is we're fully underwriting people at this point to the point that all we need is the home to be plugged into the equation. We've already reviewed all the income, all the assets. We have a hard, what's called an AUS approval, ready to drop in the lender's lap. So all they have to do is check a few boxes and fund that deal. So if you're looking for a property, I strongly suggest that you get with your mortgage professional, or I'd love for you to get with us if you're not working with anybody. I'd be happy to take care of you, but get fully underwritten, get your approval in hand so you're as good as cash. And we advocate for our borrowers. We'll call the listing agent. We will let them know, hey, listen, this person is as good as cash. We've got them all the way to all the way through underwriting to the point that we're just waiting to plug the property in. So keep swinging out there. Real estate's an amazing opportunity. Owning a property is an amazing opportunity, not only to build equity, but as we discussed in this week's show, to hedge against inflation. So if you need some good players on your team to get you over the finish line, give us a shout, 561-291-8569, 561-291-8569, or visit the website, www.mr.mortgage.
That's a wrap. Join Mark Eitel next week for more thrilling, edge-of-your-seat discussions about real estate and mortgages, right here on The Mr. Mortgage Show.
Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org. Are you a rock star real estate agent? I mean, truly one of the best? If you are, let's talk. This is Mark Eitel, host of the Mr. Mortgage Show, and we are currently expanding our network of rock star referral partners. If you think you have what it takes, we'd love to connect. Just visit Mr.Mortgage. That's www.mr.mortgage. There's no .com. Just type in Mr.Mortgage, hit the contact us button, and let's talk. It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at soflappraisal.com. That's soflappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. soflappraisal.com. And tell him you heard this on the Mr. Mortgage Show.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
That's not an egg frying. It's the Martin County real estate market, which is sizzling hot. Values are high and so is demand. Properties draw competitive offers within minutes of going public. A national website won't help you navigate this market. You need a local expert. You need Martin County Realtors of the Treasure Coast. Our members know the neighborhood, the communities, the natural resources. They'll help you discover the hidden gems and work hard to get the best price possible. Visit findalocalrealtorexpert.com.
This podcast is supported by Comcast Business. Comcast Business Internet now comes with Security Edge to help protect every device on your network, so you can be ready for what's next. Comcast Business, powering possibilities.